This is a pre-market analysis of 12th of May, and I hope you remember yesterday's pre-market analysis. In the introduction itself, I've made it very clear. It's sell on rise, and we are going to sell in case if you get any bounce. We discussed about a gap down. We got the gap down, and the market went and touched 23,800 level. So this is something which we anticipated and we discussed in yesterday's pre-market. Now today, when it comes to this, whatever we expected yesterday, it happened. And in case if they break 23,800, it can further go down till 23,600, 23,500 level. Otherwise, they can consolidate between 23,800, 24,000, 24,100 range, and that's where they are going to close the expiry. So it will be better if they finish off this expiry in the range of 24,000. It's close to 24,000. So 23,800 can act as a support because there is no further development happened after that. But still, again, Modi have further, discussed the same thing again and confirmed again not to use petrol and everything that I'll be discussing. So my point is, yesterday it is mainly because of this oil price was increasing and US-Iran conflict. But we have seen this before also. And yesterday's reaction was mainly because of Prime Minister Modi's public statement regarding the economic caution and the forex preservation. So when he is asking you to reduce the oil consumption or gas consumption or work from home culture or even buying gold, what does that mean? We already know rupee is under stress, right? Rupee is depreciating, and he's actually telling you to protect the forex reserve. So much of outflows there. FIIs are also selling. So that is again, weakening the economy. So on one side, forex pressure is there. But at the other side, if you look at it, war-related impact is also there. There can be potential shortages. And if we need to overcome that shortage, we need to keep importing more because we are not self-sufficient and we need to completely rely on imports for the oil, gas related things, right? So let's break down in detail. Again, yesterday also in Gujarat, Prime Minister Modi repeated his earlier request. So he's requesting people again that petrol, diesel usage, you have to reduce. You use metro, you use electric buses, use the public transport and avoid personal, transport to the extent possible. And in case if you want to go and fill your car and go, like carpooling is something which he's discussing, and minimize any kind of unnecessary travel so that you can bring down the use of petrol, diesel, right? And prioritize work from home, virtual meetings, avoid buying gold. So all these are like caution given by the Prime Minister to the citizen of the country. And PM Modi also compared this crisis which is going on, current Middle East crisis, but there is something which is underlying also. That's there, that crisis is there, that oil crisis is there. For us, there is a bigger crisis which is going to come because of this rupee is depreciating. And you see, importing of oil. Earlier, if you used to pay $1, right, which means 80 rupee. Now you need to pay the same $1, but that dollar became 95. So it is not that just that you are paying 80 rupee. Now you are paying 95 because of dollar depreciation. But at the same time, oil moved from 60 to 120, 100. Now think about this, $60 at 80 rupee, it was like 4,800. Now $100. So earlier conversion itself, if you see, that's a big change, right? From $4,800, it is 8,000. If rupee remained the same, but now what happened? From 80 rupee also went to 95. So 4,800, which you used to pay otherwise when rupee was at 80, crude was at 60. Now rupee is 95, crude is at 100, so 9,500. So you are doubling your expenses for the same import, and that is adding big pressure on the current account deficit, your trade deficit, and forex outflow, more forex outflow. This is what actually happening, and that is why more concerned about. And he actually compared this crisis with the COVID crisis period, actually. So this is a kind of economic crisis, and bigger crisis is going to come because of our increased dependence on the import. We have seen this kind of crisis in 1991 also, balance of payment crisis. We are not to that level, but still, the kind of rupee stress and everything that is indicating some kind of balance of payment crisis is potentially possible if things go like this for quite some time. So see that comparison, right? That is why in fact market became more nervous. and market took it very negatively also, because we have not seen such kind of public messaging, right? So when you give such kind of public messaging by the prime minister, what is that indicating? That the government is preparing for a possibility of a longer geopolitical instability, and we may be facing problem for quite some time, quite long time. It can affect our economy badly. It can create inflation. It can create unemployment. It can affect the GDP, right? It can create unnecessary things like trade deficit and everything. It is adding big pressure on your economy also. So market interpreted it like this. It can lead to weaker demand, right, and possibility of the supply chain disruptions and the forex reserve concern. So that is the reason why we have seen 23,800 level has been touched. So previously also, couple of weeks back, 23,800 touched and took support, went higher till 24,600 it went. 800 point recovery we have seen. Entire 800 point is taken out. Now 23,800. This is a very important level. There's a very psychological level also. So it's not about panic, right? It's about kind of psychologically driven move, psychologically very negative for the market, because your prime minister is talking about caution, right? So Nifty have fallen almost 360 point, and rupee was hitting fresh all-time low. And Gift Nifty, if you look at early morning, indicating 23,710, so which is again showing 100-point gap down opening. So if you are getting a 100-point gap down opening, and if that's sustained, which means you'll be getting an opening at around 23,700. If that's sustained, it can go to 23,600 and 500, which is again going to be very bad. And if you look at the ADRs are giving a very strong negative signal, and ADRs have closed strongly negative. And if you look at HDFC ADR, more than 3% negative. ICICI ADR, despite Indian markets being slightly positive yesterday, it's negative. So there is a clear fresh weakness is what you can see from banking ADR. Banking is going to be very weak. And IT ADR also, if you look at it, Infosys is -4 and Wipro is -2.5. So all ADR, whether it is IT or bank, clearly negative. So the market is going to be very negative, and a very fresh negative signal and weakness is what you can see from ADR. So Prime Minister Modi's speech, rupee is at all-time high. Mr. Trump have denied the peace deal, and oil prices increasing. ADRs are also showing such kind of weakness. So I'm looking for a move to 23,600, but again, it's an expiry day, so there will be adjustments there. The market can go sideways. You get a gap down, they try to keep it sideways by selling more puts, and then there is a possibility that it may remain sideways and some short covering because of expiry day, because there is a huge positioning at 24,000, 24,100, all these levels. So there can be one move which can surprise you, which can slightly inflate the call premiums, and more calls can be sold at that level. So adjustments is possible. I don't think that a fresh steep selling is possible immediately after the market opening just because of expiry. If it was yesterday or if it's tomorrow, we might have seen a 23,600, 500 level at the opening itself. Okay, so again, if you look at US markets have actually closed positive, but India is still weak. And the main reason why India is still weak is Prime Minister Modi's statement. That impact will definitely be there. Now, if I look at the US-Iran conflict, the situation is worsening again. Over the weekend, we have seen Trump rejected the proposal and called that proposal as totally unacceptable. And we have also seen UK and France is joining the war, which is again adding more negative sentiment. And last night, Trump also said ceasefire on massive life support, and unbelievably weak also. So that's again very hawkish, right? The tone, if you see. And if you look at Iran's key demand, it's like end to fighting on all fronts, complete end of war. This is as per BBC. Yesterday I've discussed investing.com. So US recognition of Iran's sovereignty over the Strait of Hormuz and compensation for all damages, which looks completely unacceptable. So these are the demands which is not acceptable. Otherwise, yesterday, a few of the demands that we discussed as per BBC that were acceptable also. Now, if Trump agrees to some kind of compensation, then what happens? Think about it. He started and everything, and he did that, and now he is giving compensation. Politically, it is very bad. That makes him weak. Before this midterm election. So then why? The question is, why did you started this to give compensation for the war itself? You have spent this much, and now you are going to give the compensation also. So now Trump is back to the threatening tone. Instead of giving compensation, you can devastate Iran. That could be the mindset of Trump, and you know what he will do, right? So Iran parliament speaker also warned armed forces is already ready to teach US a lesson. So the conclusion is negotiation is there, but now the negotiation is also becoming difficult again, and oil price is rising again. WTI is at 98, Brent is at 104, oil is again moving higher, which is negative for the world market and more negative for India. See, we will get affected more because of this war, mainly because we are completely importing oil and our current account deficit, our forex outflow. That's very important. Now, PM Modi is also warning. So that is again, people will take it as a caution, right? When your father is coming and telling like this means what you will do? Same. People will respect that at least. If not, people won't ignore it. Whether you follow it or not, that's different, but rarely people will ignore it, right? Majority will accept it. So despite geopolitical tensions, there are some sectors which are doing good. Semiconductor, AI stocks, they are looking strong. So US markets have closed positive. Dow Jones almost 2%, S&P 2%, and crossed 7,400 for the first time, fresh all-time high. Nasdaq flat 0.1%. Volatility but increased 7%. Now it's 18.5. So even though yesterday US markets were positive, the volatility is increasing, fear is coming back, the uncertainty is actually rising. Now, apart from that, oil marketing companies, if you see, multiple finance websites have reported many oil marketing companies have affected with the big losses, IOC, BPCL, HPCL, and the losses around 1.2 lakh crore per quarter. So if you see, the government reasoning is diesel petrol prices not stable could be the reason, and that's the reason for the huge losses for the OMCs. So that stocks also will be coming under very big trouble. So yeah, even today, if you see that stocks will be under pressure. And if you look at institutional data, yesterday, FIA sold 8,500 crores. DIIs bought close to that, 6,000 crore. But you see, FIAs are continuously, relentlessly, aggressively, they are selling the market and they don't want to stay in the Indian market. And that's how they are just exiting. For the last 2 years, they keep exiting from the market only. There is no buying, there is only selling. If you look at open interest, call additions are very high, significant yesterday. Puts barely added. So if you look at put call ratio, PCR, day before yesterday, it was 1.17 and then it became 1.03. Yesterday, it became 93. So you can see consistently it is coming down now 0.77, which is very strongly bearish, right? So if you look at the participant positioning, as usual, FIIs and prop traders, they are bearish. Combined, it's around 20%. Retailers around 20% bullish. The same structure, retailers are bullish, smart money is cautious. Okay. Apart from that, yesterday already we discussed 20-point gap down opening as we discussed and closed at 23,810. Now they're breaking that 800 level, psychological level. Possibilities that it can go to 23,500, but since it's expiry, they may prevent that today. That the attempt that they will make, but still we need to wait and watch what is going to happen. So large bearish candle is what we have seen yesterday. A fresh clear weakness is what we can see. Now it also fell below that Fibonacci retracement of April rally, which we have seen. So 23.6%. And moving average is also now trending downward. RSI, yesterday we discussed it's slightly above the reference line, but it's now dropped to 46, which is again looking bad. So the important support was 23,800, but that's now breaking, opening itself most probably. So it should be going to 23,500. But since it's expiry, I'm not expecting a sudden steep fall. There could be some adjustments and then there may be a fall. So the possibility is that if you are an option buyer, you may get trapped in that adjustment. If you can avoid that, then you will be doing good. Okay. So that's what. Now coming to options data, maximum call OI was at 24,500. Now that is shifting to 24,200, 24,000 also. Right. So the expiry I'm looking for, if it will be great if you get an expiry between 23,800 to 24,000. It will be great. Otherwise, we need to wait and watch. It will be worst if it goes to 23,500 level. The expiry also will be, under very big pressure. But this is a day where you can make very good money. In the afternoon, there could be either a big short covering move or there could be a big selling. Once you get a bounce to maybe 20 MA, and if you start seeing a sell-off, buy, put and hold it. Okay, so the range, again, we are looking for 23,500 to 24,500. That's the larger range. But today, it will be good if they give a close between 23,800 to 24,000. Though your opening is below 23,800. But if this is a range, it is good. But chances are 23,500 to 24,000. Right, so overall market sentiment is clearly weakening. Negatives, if you see, most importantly for us, it is Prime Minister Modi doubling down on caution, repeating the same: oil rising again, US-Iran disagreement, the escalation is there, hawkish tone is there, rupee is weakening, FIIs are mega sellers, current account deficit is increasing. All these are negative. Just that US market's positive doesn't mean we can trade for that. But that is one positive which I can discuss, and DIS are supporting. That's there every day. So market is shifting from war panic to macroeconomic concern for India. War panic is already there. We have seen that for the last 3 months. Now our economic situation is also getting affected badly, and we all know our hotels are getting closed. In our home also we have seen that impact as well, right? So let's see how this expiry is going to be spanned out. It will be very interesting. And if you would like to join the live market mentoring session, join us. So where we will be teaching you with our live trades and everything. So you'll have a better learning experience. See you there.